Hi all, Joshua Steger here from ETFadviser.com.au, and today I'll do my usual weekly rundown of the Aussie ETF market and what we can expect in the week ahead. So I'm just putting my finishing touches on the weekly email that's going to go out to subscribers, but I just wanted to hone in on some of our recommendations last week. So you can see we've been really focused on Asia, so there's the two Asian exposures. And then also these metals, energy related themes, so the uranium as well. So we've had a really big week between the week just gone. So we've had Asia into 4-year highs, we had IAA into 4-year highs, and they look like they're really starting to trend. So that could be a big week ahead for them. So keep an eye on those. But we've certainly recommended clients get some, or subscribers get some really good positions in these ETFs. And then we've also had XMET and Atom into new all-time highs for those ETFs. And then we've got 1-year highs for ACDC and GMTL. So these are kind of energy-related metals and resources. And then you've got uranium as well. So a really big week, successful week. And I think we've still got a lot more action going forward. And as you can see, we're not just talking about the big indexes where most people have invested, particularly with ETFs, where they just invested in the ASX or the NASDAQ or things like that, or tech. We're looking at where the other opportunities lie outside of that, and probably a bit more risk adjusted as well. So really big week, very excited here with what can happen in Asia, and also in metals in general, and metals and resources, which most people are really underweight. So as I said, if you're interested, you can sign up to a free 30-day trial of the full subscription email. Just go into YouTube, go into the profile, and then go to this link, and you get a free 30-day trial. Try it out, and then see what you think from there. But certainly happy to offer that, because I think ETFs, there's a lot of opportunity out there at the moment, and Aussie investors, I think, are largely missing out on all that. So let's have a look at some of these charts. So I just wanted to speak firstly on iron ore prices. So you can see iron ore obviously really important for Australia, and hasn't been doing a whole lot. Here's your tariff correction, but what's been interesting was here's that low. It's actually looking really constructive now, coming out of this would be a little base here and just starting to pop up. And then you're just thinking, why would the iron ore price start to be creeping up, particularly when everyone's very bearish on China and saying, well, they don't need further materials for construction, and obviously they've overbuilt their property market and whatnot, but certainly creeping up. So there are rumours that there's stimulus coming from China, so that could be another big step change. And we're talking about the last few weeks, just how we've had, it looks like those resources are starting to turn. So really interesting times there at the moment. Iron ore starting to join the party. Let's just have a look at some of these other resources as well. Here we are. So we've got obviously gold not doing a whole lot, and has been a huge winner, and now just really quite constructive here. Not selling off, but also doesn't have the energy to keep moving, particularly given that rally. But that's an interesting sign. Here we've got silver as well. Had a big week, or a big close to the week last week, and it's kind of held that move. So that's positive. But also we've got copper. Copper's kind of held that. So this is the 50% tariff announcement, and that's one of the big step changes we've been talking about. It's kind of changed the market for resources, and you can clearly see governments starting to, and companies starting to get interested in securing supply. So interestingly, copper's kind of held, and that's a 6-day moving average at the moment, and 10 days starting to catch up as well. But it's held that move, but the copper stocks haven't responded. So here we've got the copper ETF in Australia, Wire, and we've still got this high on the watch list, because this looks really interesting. Here on the weekly chart, you can kind of see where the resistance is, and that's where it's come into up here. And that was kind of the copper tariff announcement in the US, but it's held up pretty nicely here. A bit of selling has come in, but held up quite nicely and quite constructive. So certainly be watching that if copper stocks can really start moving as well. So add to copper, but we're also starting to see what looks like bottoms in certain other commodities. So things like aluminium and zinc. So aluminium starting to creep up this week. As you can see, it's just a lot of red bars, a lot of red selling, but it is finding higher lows and starting to creep out, which is a really positive sign for base metals in general, which look really cheap and are very under-owned by fund managers and investors. So here you got zinc as well, had a good close to the week. So it feels like something's certainly brewing in that space. And one of the things that set that off was in the US when the Department of Defense invested in MP Materials. So this is a rare earth miner, domestic rare earth miner in the US. The US Department of Defense, there's a 50% move invested. And then we've had Apple as well this week invest as well. So companies, governments, very keen to secure supply of critical minerals. Who's got a lot of those minerals? Australia, and we've also got in particular a lot of really good ETFs to play those themes as well. So as I said, yeah, some of those key ideas that we had been talking about which moved last week. So here you've got XMET, which moved into a new all-time high for that ETF. You can see there's your tariff low, and then it's just kind of crept out. This was a really constructive pattern or kind of consolidation here before it's moved out, and now it's in trend. So that's really positive. ACDC, another one that you could access in Australia, same kind of theme, like energy-related materials, clean energy and that type of thing. So you can see, once again, really constructive pattern. Hasn't moved as strongly, but starting to trend. So coming up into probably that weekly resistance, but really good signs here, as I said, for that step change that we're seeing. Now let's go to the bigger indexes, and this is a bit of a surprise for the Aussie index as well, where we've got, probably wasn't expecting it to do a whole lot, coming up, just chopping through this kind of previous high resistance, and then it just had a good finish to the week. So part of the reason is that we are getting that kind of rotation into resources, and you can kind of see a bit of a broadening in where the participation is in our market as well. So here we've got the ISO small caps ETF, and you can see that popped up nicely to finish the week. So really positive, and I think about 25% plus of the actual holdings within, say, the small caps are going to be resources and commodity related. And if we do start to get a really nice bid there, this could really start to move. So that's something to keep an eye on. ATEC actually holding up as well. So we've got our previous winners holding up, and then we've got a rotation into resources. So, I mean, the Aussie market actually looks really quite interesting here. So another example of this is the financials. They found that support on the 50-day and popped up. So really interesting. For resources, this is not what I'm watching. MVR, this is kind of my proxy for resources in Australia as an ETF. And you can see that starting to look, so there's your tariff correction, crept up. And now, look, that's looking really constructive. You can see it's tightening up, kind of building that energy for the next move. Certainly something to keep an eye on. And as I said, institutional investors, I mean, every investor is pretty much really underweight resources at the moment because, and for good reason. I mean, just look at the BHP share price. It's pretty much been in a solid downtrend. And, you know, this is a really big part of the index. So people are underweight, and all of a sudden now it's starting to look a bit more constructive, popping up above all these moving averages. The moving averages are starting to point up, and then here you've had all your selling, and now we're starting to get some buying and a couple of big buying days. So it could mean all of a sudden fund managers who are underweight, they might say hold 2% of BHP in their portfolios, all of a sudden have to go, you know, BHP's moving, we've got to now double our exposure. And if that happens on a big scale, all of a sudden you're going to have a lot of money chasing these moves. So that's something to keep an eye on, and there's a really big step change happening globally, but also our market will be a big beneficiary. So let's now have a look at the US indexes, and we've been talking about, you know, the potential for correction. It's not a matter of if, it's a matter of when, and you can kind of see creeping into new highs. We've got a lot more earnings started to come out next week. So I think we had Netflix report So they reported earnings, I think that's Thursday, and then kind of sold off Friday. High volume kind of selling. This is out of the tariff corrections, had a really big run. So this is not abnormal action. At some stage, you're going to get that pullback. It's kind of around that 50-day moving average. See what it does next week. But, you know, potential for that to happen on a broader scale with a lot of these stocks starting to report, and if their expectations, you just never know how stocks report, how investors are going to react. The numbers can look really good for the future, and can still get sold, and then vice versa. You might look at the report and go, oh, this doesn't read too well, and all of a sudden the stock's taken off. So earnings is a bit like that. So we have to be a little bit cautious, and this might, along with tariff news and anything unexpected, could cause a little bit of a correction. So the 50-day moving average here is about 5 or 6% lower than where the market is at the moment. So that would be really constructive for it to pull back here and then set up for a good finish to the year. So just be aware that if you have individual stocks, a pullback of 6% could still mean a 30% pullback in some of these really high moving momentum names like Netflix as an example, just given how far they've moved and how quickly. So just keep that in mind. And that's why we're a little bit cautious for subscribers running into, say, tech and the NASDAQ, and also a lot of AI, just a little bit cautious. We want exposure there, but just where these markets are, and for the, just a matter of when for a correction. So this is the NASDAQ creeping up as well. Just be a little bit cautious. IWM, so this is small caps in the US, starting to look a lot better, as you can see, looking a lot more constructive, coming up to that weekly resistance, but that's also a good sign for their market. Things are broadening out just a little bit. I mean, all the action's been really in the big tech stocks, but if we start to see a bit of action outside of that, that's a really positive sign. India, a little bit slow, just working through that weekly resistance. So want to kind of see it hold this moving average, which is a 50-day, pretty much is, but hasn't been a great week. But what could really spark India is a trade deal with the US, and which seems to be imminent. Japan, we had that little pop a couple of weeks ago. It's kind of held that. Just looks like still a bit of a difficult market. So where we've really been focused and excited about is what we're seeing in China and Hong Kong. So if you have a look at the weekly charts, this is the top 50 stocks in China. You can see there's your stimulus announcement. So basically China just in the doldrums, the market, no one wanted to be there. Stimulus, now it's kind of worked through that almost a year, just chopping through. But if you have a look on the daily chart, this is starting to look really constructive. Popped up, sold in this week, and then we'll just see what happens from here. But that looks really constructive. So that's the Chinese index, but what's even better is the Hong Kong index, and this is kind of the international way to play the China market and the Asian market. A lot of Chinese stocks are listing now in Hong Kong, but also Asian stocks as well from Singapore, Indonesia, that type of thing, all starting to flock to the Hong Kong market, and the IPO market's really firing at the moment. So if we have a look at I'll just show you how significant this index has underperformed of late. So you can see back in 2018, the index was about over 32,000, and it wasn't long ago, it's around 15,000. But if you have a look, this is the monthly chart, that's really constructive base. And then if we have a look at the daily chart, and you can just see, look how constructive this is, just been working its way out, kind of building that energy, popped its head above this week, and then we'll see what happens. And if we do get some Chinese stimulus, I mean, this could be a way, but let alone that, all you need is a few positive signs. The big cap stocks, which we've been watching, are Baba and Tencent, so they've been a little bit weaker than expected. There's probably the trend line, and it's just starting to pop above that. That's a positive week, so we'll see if we can get some follow-on buying there, but that looks really interesting. Tencent as well, which is another big tech stock in Hong Kong, and you can see that looks better than Baba, and we'll just see how that plays out. But outside of that, we've also got a lot really positive action in the small caps. Unfortunately, we don't have a small cap index for China and Hong Kong in Australia, but there is one that we can look at in the US. So this is the iShares China Small Cap ETF, and you can see that's just been an absolute tear. So that's where the action has been, and that's why we have been really focused for investors in looking at Asia as a way to play that theme. And you can see we did get that 4-year high. Oh, sorry, it's actually an all-time high. And yeah, look at that really constructive base, kind of just settled in here, and now it's starting to push. So new all-time high. All investors are happy investors at all-time highs, and now this may well be in trend because people still seem to be very negative on Asia, even though valuations are quite good, and we'll see how those companies start to report in the coming weeks as well. So that's really interesting and something to keep an eye on. Outside of that, game, this was a positive sign this week. So this has been a really big winner. So this is video games and esports ETF. It's had a huge run. It started to look like it was starting to sell off and looking a bit weak. Held that 50-day and has actually popped up, had a really good week this week as well. So some of these key sectors are still really strong, but where we're really focused on, as I said, are those resources, and there's a really big step change in the market at the moment. So and that's really positive for the Aussie market. So we've got the Aussie market, we've got resources, we've got Asia now going forward, where we could have a really big week. And certainly, yeah, as I said, there's some really good ETFs to play these themes. And then also wouldn't be able to finish without touching on crypto, which has also had a really big week. So the winning kind of exposure in crypto land has been in Ethereum, and you can see, I think it's up some like 40% in the last couple of weeks. So huge run, a lot of buying there coming in. As you can see, the weekly chart was pretty junky, but still, just looking at that daily chart, moved out. So we did talk about that and said it was worth watching. Our real focus was on Bitcoin, a bit less risk, and we were talking about it the last couple of weeks before it moved, saying this was a bull flag, and it's moved out nicely, and I think it can continue to move as long as the global markets remain pretty buoyant. So we had Bitcoin and crypto. ETF was another way to play that theme, and that's looking really well as well, in trend now, and got some weekly resistance here, but certainly these can really trend now that it's a key theme, key idea. You've got Ethereum absolutely flying, Bitcoin strong and creeping. I mean, there's still a lot of potential upside there. As I said, dependent on if we do start to get a correction in the US, I think that'll put some pressure on these. But if things keep creeping for another couple of weeks before a correction does eventuate, these crypto stocks can really continue to run pretty strongly. So, as I said at the start of start of this video, is that our focus is to be a little bit cautious on these markets that are at all-time highs or creeping up, and as I said, likely to have a correction soon. And we're more so focused in things that are really trending. So it looks like Asia, China, and a lot of these commodities are kind of key ideas. And we've outlined, I think we've got about 7 really key ideas this week for subscribers. So yeah, thanks for your time. As I said, expecting a big week, and hopefully we can get some more good calls out to subscribers. And as I said, once again, if you're interested, sign up to a free 30-day trial. And when you're ready to sign up to a full membership, it's only $10 a week. Could be the best investment you make this year. Thanks again for your time.